Here are my rules. Firstly, I want to identify the current order flow in the market. And what is order flow? Order flow is just, it just simply means trend market is currently following, right? Neglecting the retracement, I just want to see the clear direction of the market. Now, once I see a clear direction of the market, what I'm expecting to see is a retracement this time around. And when I get the retracement this time around, I want to see series of clear break of structure to confirm the retracement in the trend. So in this scenario, I'm working with a sell order flow, a selling order flow, right? A bearish order flow, right? So once I can identify the current order flow in the market, right, I want to do what? Identify key levels in the market. So you see all these turning points on the higher time frame are key levels, right? And make sure you want to have your bias. You want to make sure you are trading with bias and confirmation. You don't just want to trade blindly. So these are key levels. This is our key level. The higher the key level in a bearish scenario, the higher the efficiency of it, dumping the price of the asset. And the inverse of that, okay, inverse scale. The inverse of that is this: in a bullish scenario, the lower the key level, the higher the efficiency of it taking the price of the asset to the upside. All right, so let's go back to our normal scale. All right, so after having these key levels, like turning points in the market, these are also turning points in the market. Don't forget, these also are turning points in the market. Key levels are everywhere, as a matter of fact, but what I make use of most time is what's it called? Fair value gap. I make use of fair value gap most of the time. So these key levels do not really matter to me. Turning points in the market, areas of liquidity in the market does not really matter to me. What matters to me most is what? Fair value gaps or old highs, right? For example, this was a lower low. This is a lower low, but this also is a lower low, right? But this is an old high. This is an old high. So if I'm not making use of fair value gap, then I'll be making use of old high, which means I won't be considering these key levels at all. Do you understand? So I'll just be focusing on these key levels or fair value gaps in between them. Let's say this doesn't have fair value gap, so let's say this has fair value gap, right? And let's say this right here has fair value gap. So I'll be focusing on these two fair value gap. If I get my confirmation on this fair value gap, I'll take the trade. If I don't, I'll wait for this key level to get taken, right? So if this key level right here gets taken and I get my confirmation, I'll take the trade. But if it doesn't and it gives me confirmation right here, I'll take the trade. If it doesn't give me confirmation right here, I'll wait until I get my confirmation. So that's how it works, guys. That is a daily that is a bias analysis, right? That's a bias analysis. All right, so what's the third thing? DOL. So once you get your confirmation right here and you want to trade to dump the price, you should have a target, right? So we are going to get there. Now, what are the confirmations? Since we already understood the bias in the market, what are the confirmations? I'm going to recap this with a real time chart, right? A real life chart. So all you just basically need to do is to watch all episodes attached to this video, related to this video. I'm going to arrange them one after the other, and each episode is going to be around 8 minutes long. So at the end of the 8 minutes, then another episode starts. So you get all the links in the description section, or you get it in my playlist actually. All right, so with that being said, with bias being confirmed, you already have your FVGs marked out. Like, firstly, you are able to identify the order flow in the market. Bearish in this scenario. The order flow is bearish in this scenario, right? The second thing is you want to identify the key levels or the fair value gaps, not IFVG, no, fair value gaps or turning points in the market. All right, so with that being said, what are the confirmation you want to see? You want to see break of structures. Actually, you want to see break of structure and price returning back into the range. For example, you want to see candlesticks like this, because if you should switch to a more lower time frame, if you should switch to a more lower time frame, that is what it's going to give you. But to get a general view of what I'm trying to say, I'm going to be explaining with candles. All right, so you want to see this kind of confirmation at the FVG. What I'm drawing right here right now, right, this second candle, you want to see it at the FVG or at the key level. You want to see